I really enjoyed today's trading day because what I did is I applied ICT's latest teachings that he taught over the last 2 weeks, and I applied it to this trade here. And this was one of the most effortless trades that I've taken all week. And I want to make a video about it. I want to tell you guys about this concept. If you guys haven't watched his videos, I'm going to explain it within 5 minutes. Key areas to focus on, a couple of rules that I'll mention at the end of the video. And what I want you guys to do is I want you guys to back test this and forward test this on top of your current trades and what you're currently looking at from a price action perspective. So let's dive right into it. This was a 3.5 to 1 risk to reward trade, afternoon of October 22nd of 2025. And what I want to do is I want to focus your attention to the right-hand side here, which is the daily NQ chart. And what I want to kind of, talk about point one being is we want to understand where the key, number one, fair value gaps are on the daily chart and where the key wicks, right, on the daily. What we want to do is we want to grade those. And we want to apply those grades to the 1 minute and see how it's being reacted to on the 1 minute, okay? So in this case, what we did is we took this main or key, highly respected daily fair value gap known as a BISI, right? It's a bullish fair value gap. And you can see here, what I've also done is I've graded in purple here. And there's basically 4 levels here. Okay, there's, the high, the low, and the 3 quadrants laying in between. And what we want to do here, as price is trading into this key PD array, we want to take all this and we want to map it to the 1 minute. What we're going to do here is we are going to take the blue fair value gap, map it. So we know where it is in relative to price today. And then we also want to take the quadrants as well. And we want to map these to the price. And kind of looking at what happened after 1:30, that's when the true afternoon session starts. Is, price pushed up into this, these green bars here. All these are just first presentation gaps from a couple of days ago. It created its first presentation fair value gap at 133. It dropped lower. It pushed past the lower quadrant of the daily fair value gap. It continued dropping around 140, 141 below the daily fair value gap. You can see here, it attempted to push higher. It just filled in a 1 minute fair value gap, pushed lower once again, tapped into Monday's first presentation fair value gap from last week. And again, these PD arrays don't get stale, especially like the Monday PD array. So like Monday's first presentation fair value gap or the month's first presentation fair value gap, those tend to work extremely well and have a weighted hand to price action. That's where price traded to. And then what it did is once it hit this level, it started punching back into the daily fair value gap. And the keynote that I want you to take away from this is look what it did when it broke past the lower quadrant or the lowest quadrant of the daily fair value gap being 24,838. It left a fair value gap here. And what ICT said is when these fair value gaps form at these quadrants, and on top of them specifically, when price comes back and respects them, it really complements your trade or your bias really nicely, because if it's the right time of day, which is very important within macros, it's considered a high probability order block. And this is how he cherry picks fair value gap. So I cherry picked this one today using these concepts. And you can see what price did. So before it kind of goes into this, I want to take you through what NQ did. It pushed higher very aggressively. It broke market structure. Once it broke the high of this candle at 148, it pushed into the afternoon first presentation fair value gap. And you can see what it started doing here. It tried to break it multiple times, but what it ultimately did is it left a lot of relative equal highs above here, which means liquidity, right? You have a lot of sell stops probably, up there. And when it comes to retail logic, everyone's like, oh, okay, perfect. It retraced. It's creating a top here. It's probably going to drop. And what price did it? It actually did drop. But what did it drop into? It dropped into 2 key levels. Number one, the bullish breaker of this market structure shift, which is basically the last up closed candles, or the grouping of up closed candles before before the market structure shift. You can see how it price nicely came down into here. The bodies stayed within this bullish breaker, and it also respected the upper half of this fair value gap that was formed on top of one of these quadrants. And when I saw these two things converge, along with the market structure shift and the relative equal highs, that's when I decided to take the trade long, and it netted 3.5 out of 1. Again, I only did half risk here. I risked $100, and it pulled, what you see there on the screen, $370, per account. across all my accounts. And again, it was a very clean trade. It's 2.5 minutes, almost 3 minutes long. And you can see price continued pushing higher. The consensus here was that I thought price would have troubles around this area right here, just because we had so many stacked PD arrays. But what it did is it broke through it and inverted all of them. And then it started pushing higher at the 250 to 310 macro. So again, if I were to recap all of this, and if you guys grab a piece of paper and write this down, is number one, when it comes to fair value gaps or when it comes to wicks, you want to grade them and you want to transpose those grades into your 1 minute chart. Sometimes, and this is very important, sometimes when there's multiple wicks, it's very difficult to understand which one to choose. Based on ICT's rules, you always want to select the longest or the largest one. In this case, I've got 4 wicks here. So if I were to ever be grading price action around this wick right here, this premium wick, I would be using the largest wick here. So that's very important. Number 3, you want to transpose this and you want to see where is price creating fair value gaps on these quadrants. Very important. It has to be on it. It can't be below it. It can't be above it. It has to be on it. And number 4, it has to be the right time of day. Usually when price starts coming back to these fair value gaps that are laid on top of these quadrants, you want it to happen within a macro. If that's like the 8:30 or the 9:30 opening range or at the top of the every hour, those are areas where you want to see price start drilling into these cherry picked fair value gaps. And that's where you want to see it expand in your favor. You can see what I did here. I stacked a couple of things, right? So we were dropping all day. We're close to end of day. We had a market structure shift. We had liquidity to the upside. We completely filled in the fair value gap here on a daily perspective. And my anticipation was that price is going to want to pull back at some point. And this is probably a high probability event that it might be doing that. And I was right. Again, instead of a 3-to-1, it could have been like 11-to-1 if I held it an extra hour. Tough to do, as you know, being a trader, try to lock in that profit. And more times than not, I let trades go. They always come back to haunt me at, break even. And sometimes when I cut it short, it goes all the way to the last possible price target. But all in all, happy with this, wanted to share this. And again, start grading your quadrants, your wicks, and that's that. So if you guys enjoyed this video, feel free to drop a like and drop a sub if you guys aren't subbed already. And I am excited for the last 2 trading days of the week. I think they're going to be big. There's a lot of potential. We've got a lot of sell side sitting above us here. Like if I were to take you guys just to the 1 hour here, like look at the 1 hour. Look what it did here. Like we are right here and look what it left above us. Relative equal highs. Like this is going to be the magnet. We just have to wait on when price is going to turn on and start aggressively pricing towards these highs. But this right here, the highs are going to be taken. We just got to wait for that day when it happens. And that is going to be the draw on liquidity for when that time comes. And I guess on that note, stay safe, trade safe, and talk soon.